Welcome to Bears in Exile. Today is Friday, November the 9th, and this is the weekend market overview. Looking at everything that we look at every single night, but not this coming week. I'll be on vacation, so this will be the last video until next weekend's weekend market overview. So I won't even be watching. So maybe I'll come back to a surprise rally or a surprise crash, who knows. But anyways, starting off with the Dow, up 4 points, very measly little 4 points, and well, what do we have to see? Oh, we have a spinning top, very nice, very pretty spinning top, and potential reversal candle, maybe. Not as nice as a hammer or a gravestone doji or something of that nature, but still, it is a better candle to have than Thursday's continued ugliness. Beyond that, we continue to hold below the 200-day moving average. Very, very important. And something the talking heads love to talk about. Oh, we're below the 200-day moving average. It's all over. Well, maybe. I personally am of the opinion that at some point it's going to try a retest of the bottom trend line of the descending channel. I don't know if it'll get there, but it would seem likely to me that there will be an attempt. Do we have any evidence for that in the indicators? Well, bottoming area in the heat map continues, and everything else is pointing down or holding low sideways in the case of the regular RSI. So just like last night's video, waiting for a indication that it's turning. Still don't have that today. We do have positive divergence in the MACD histogram. Of course, that was busted out on a few charts this last week and a half. So, can we really count on that at this moment? No, but it's still interesting that it does exist there. So, daily, yep, no indication yet except for a possible weak reversal signal in the candle. I do think that it's positive that the weekend is here and maybe give people a chance to step back, take a breath, and, not be so incredibly fearful. Looking at the 60-minute time frame, what do we have here? Well, we've had a couple of minor attempts. We had an attempt today to go up. It was beaten back fairly quickly. And what do we have? We have the MACD histogram trending up very nicely. We have the MACD itself trying to do a bullish cross. We're going down on the CCI, the stochastics, and the 14-day RSI moving average, only moving up in addition to the histogram with the regular RSI. So, is this compelling? No. I mean, this could fall back down again, which is what we saw on the daily with the Dow when we were watching the MACD histogram trend up. So, still, it's not a bad sign. It's not a bad sign. More often than not, it pans out. But, yeah, it can fail. So, very interesting. Next week will be, well, I won't see it. Going on to SPX. This one isn't so bad. It tried. It's almost at the 200-day moving average. It pierced it really nicely. We still have a bottoming area in the heat map. And everything is still, for the most part, moving down with the exception of the RSI. So do we have a really good sign at this point that it's going to bounce? No, we don't have upticks on the majority of things, which is what we'd like to see. But still, this is not as bad as the Dow. This is much more encouraging, and it is an inverse hammer, which is a better reversal signal than potential reversal signal than a spinning top, and it is at the bottom of a possible range. not bad. Definitely better than the Dow. And the VIX, you know, this one just doesn't say as much as I would like. We have another hanging man, just like on Thursday. It is slightly higher. It is larger, nicer. Notice that its shadow went right down to the 200-day moving average and it bounced off of it. So lots of people would appear believe that there's more downside to go if it's going to get bought up so aggressively at the 200-day moving average. Beyond that, we have continue to have minor topping area in the heat map. We have everything still moving or holding high, with the exception of the MACD histogram ticking it down. So not the definitive, signal that we would like, but and it would appear to be very early at this moment. So I guess the question will become, can it break out of the recent high or not? And that, I would assume, will trigger the next movement, if it'll be further up or further down, because people will be looking for that. I would be. And TNA, small caps. This one had hung out so much longer than the Dow and SPX inside of its channel, breaking down from it on Wednesday and getting really nasty on Thursday. And it did what it should do, which is go sideways or up to get back inside of the lower Bollinger Band. It's exactly what it did, sideways and a little bit up, just to get inside. Beyond that, bottoming area in the heat map continues to build, and for the most part, everything ticking down. Although we do have the CCI and the RSI ticking up. That is better than the Dow. It is better than SPX. So just needs more development. Just does. And UUP, the dollar. This one is the part that just I really don't like, at least for the bullish perspective. You have a spinning top of a possible range. That's not bad, but it continues to inch up even as, it looks very extended. It's red every single day, but it continues just to bump up ever so slightly, and it hasn't given us a downtick. We do know that there's excessive separation here. We do have wobble here, so we know that there's a bubble here. We just need an indication that it's time for it to drop. And do we have that in the secondaries? No. MACD histogram going sideways, MACD up, RSI holding high sideways. Barely a tick down on the CCI, holding high on the 14-day RSI moving average, which is actually still ticking up, and the stochastics holding high. So, good sign for a reversal here at this moment? No, not yet. And USO oil. This one's kind of neat. I mean, it did fairly well today. Markets actually should have done a little bit better than they did. We got an uptick today. The uptick was like a penny off from resolving. And beyond that, you have the MACD histogram very clearly going up. The MACD looking for a bullish cross, going up on the CCI, going up on the RSI, mixed on the stochastics, holding low, ticking down on the 14-day RSI moving average. It is very mixed, but it doesn't look bad. It would be entirely different if it had completed that uptick target intraday today. So, because that would have caused a need to see what it would want to do next, and it could go down again. But really, not bad. And going on to Comp Q, the NASDAQ. After breaking all of these very important levels, today it was able to get back inside the lower Bollinger Band. Good sign. It is an inverse hammer. It is at the bottom of a possible range. All good things so far. Still bottoming area in the heat map. Ticking up on the RSI, CCI. Going down on the stochastics, 14-day RSI moving average holding low sideways. down on the MACD, down on the MACD histogram. We just don't have enough to say that this needs to rise immediately, as the CCI and the RSI could take it back down. So it needs more time for development, and might as well go to the 60-minute just to try and get a better feel. Does this have more on the downside? Well, we still have movement down on the CCI, the stochastics, 14-day RSI moving average holding low, down on the histogram, sideways on the MACD, losing momentum, and barely up on the RSI. So 60-minute time frame, more negative than positive? Yes. It would seem like it would need to retest this bottom right here, which was the opening today, and see if it can bounce off of it, or see if it will pierce it or break it. So, and it would seem likely that that'll need to happen. Moving on to Apple. And finally, Apple got a green day, finally. Not bad. Notice where it stopped. It's right below the midpoint of yesterday's red candle. So there is resistance, absolutely. It is a spinning top. It has a really nice bottoming area. Yesterday was massively red. We noted that in the video, and it did get a little bit of a bounce today. It still should have more, but it's not quite as bad as it was yesterday. Beyond that, we do have a first day uptick on the MACD histogram. We are moving up on the CCI and the RSI. Everything else is ticking down or holding low, but this is better developed than many of the other charts where we were saying we only had 2 indicators. This one has 3. So certainly we need to see if it has more development. We certainly don't have an uptick on the short-term moving averages. We don't have a retest of the 200-day moving average yet, so that would also seem likely, just shy of 600. What can you say? Everything needs more development, and a breather for the weekend, a very good thing. And going on to GE, trying to get a better read on the Dow. Yeah, not bad. If it had closed at its highs, it would have had an uptick target, but it didn't. MACD histogram going on up. RSI going up. Everything else going down. So more negative or positive? It is more negative at this point. We do have a new recent low today, which is definitely negative. Not too far away from the 200-day moving average. Yes, it is an inverse hammer today. Kind of a fat body for that, but that is what it is. A very weak signal for a reversal, and but yep, definitely more negative than positive. And JP Morgan, the most important bank, spinning top, new recent low today, bearish. Everything with the exception of the RSI still moving down. It's barely starting to form a bottoming area in the heat map. So is this more positive or negative? It definitely looks more negative than positive, yes. It is at a point where maybe it could be caught because we have this previous low over here. But really, it wouldn't seem to be that powerful at this point. As a matter of fact, I'm going to look at volume and see where it is. Well, we can see that we have a big area right here above us that is resistance. That is exactly where it ran up to today and then faded away from. So we know that that is solid. Beyond that, we don't have much strength. I mean, we have a little blip right here, which loosely aligns with this area where it's getting caught at the moment, but really that isn't very powerful. The next real support is over here just above 39, and that is not major. The next major support is down here at 37. And going on to XLF, the financials as a whole. And this one, I think, looks better than JP Morgan. I mean, it closed below this support level. Oh, no, it didn't. Actually, it recovered it. That's nice. It was caught at this support level. That is nice. It got back inside the lower Bollinger Band. It is an inverse hammer. And it's an inverse hammer at the bottom of a possible range. Not bad. We have more development as to a bottoming area than JP Morgan. We do have everything ticking down, and we do not have an uptick on the RSI like so many other things. So in that aspect, it does look worse. But yeah, proof that it's being at least attempt to be caught right here, along with the candle and the position of the candle. I think that that looks better than JP Morgan. I do. And is there anything else? No, I think that's... oh, I should look at the Dow Jones Transports and see if there's anything different here, since this one has been leading the market as a whole. And, ooh, very interesting. We don't have a reversal candle of any type today. And it closed below the major price consensus level. And it doesn't have a bottoming area in the heat map. And everything is pointing down. The 14-day RSI moving average just getting underway to the downside. This looks really bad. This looks way worse than the Dow and SPX. So if this one is going to lead, this is not a good sign. The only thing that's really good about this, if you could call it really good, is we have this bottoming area right here from before, which aligns with the bottoming area from before that. And all of that loosely lines up with the major price consensus level for the month of October. So while this could slide some more, it does have a level in which it should attempt to be caught. So technically worse, but at least it has a very clear support close by. Interesting. And that's going to do it for this weekend. I'll be back next weekend for my first video post vacation. So I hope everybody has a wonderful weekend and a wonderful week. And hopefully the market will go your way, whichever direction it is that you're playing. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you very much.